If you're interested in learning to trade on Betfair or to improve your Betfair trading, then you've arrived at the right place. Head on over to our website where you can find the best Betfair trading form available, packed full of illustrations, examples and downloadable files. Head on over to the Academy where you can take a very detailed and structured Betfair trading course, or visit BetAngel TV where there are over 210 hours of Betfair trading videos. Visit the website also to get a free trial of BetAngel. Don't forget to subscribe to our channel and click on the bell icon to be notified of when new videos are released. So there was a video I did a while ago about high probability versus high profitability strategies, and I thought it would be interesting to show you this in the market. Somebody left a comment last week on the Q&A and on the video to say, can you give me an example of this? So here we go. Now, high profitability strategies I've summarized in the past as being strategies that are generally profit accretive over time. They tend to be unusual. They very often don't tend to be high strike rate. And there are a number of characteristics. I'm really generalizing there. However, you know, if somebody said, how could you generate a consistent stream of profitable results that would look impressive on a P&L? This would be the way that I would do it. Now, I have to say, I don't trade this way. So for me, trading is about putting an order in, managing that order, doing the best out of it and making a judgment on the quality of the order and profiting from that knowledge. It's not about trying to make a position work, because that's bad money management. So you could almost classify this and say that this is bad money management. But I'm going to do it anyway, because in fact, if you want to see how to do this and why people do this, you'll see that it looks pretty effective, but there are some flaws within it. So let's have a look at it anyway, and I'll show you the trade that never loses. So first of all, we've got to do the same things that we normally do. We've got to set up what the trade is. So you can see here I'm using £10 stakes across all these ladders. I'm doing offset with greening with 1 tick and a 30-second fill or kill delay. Don't need to worry about the batches, but what you do need to worry about is the global settings, because if you have them off, the offset bet won't go in. If you have them on, then we're set up nicely to do this particular trade. And as with any market, you should really be looking at what is going on within the actual market itself. In fact, it would help if it was on the right side as well. So let me change channels here. So you can see Grateful James is all over the place there, so probably we won't trade him. But we can see a few of the others look reasonably okay. And in fact, the favourite doesn't look too bad here, so let's trade the favourite. So if I go in with the setup and, whoops, almost clicked as the price came in, and I click here, it's going to put the order into the market, and then when that order gets matched, BetAngel is going to offset it 1 tick higher and put it in a profitable position. And when that matches, we get our profit. So waiting for the money to disappear at 4.9, which it will hopefully do, and it didn't. So let's do another trade up here and cancel this one down here. And you'll notice I'm being fairly indiscriminate, but that's the essence of this strategy. So I'm going to do another one here. And you can see we've got a couple of positions to close up here. So there's not a great deal of skill or judgment being used on this particular trade. I'll do another one here. And you can see I've lined up 3. So as the price moves down and past those will get offset and matched. So the theory goes. I'm actually hoping the position goes against us at some point. This is why I'm doing this. So I'm going to dump another one in. So the problem that you have with it when you're doing this type of thing is really you should have money management in place. And money management when trading is a certain stake and a certain liability, and then you manage that position and that liability. So you can see here we're using £10 stakes, but our net stake is 30. It's 3 times what our base stake is. So my style of trading is you put a base stake in, you take that base stake out, and then you repeat that process. On this style of trading, what we're doing is we're just pumping the market full of orders. So you can see there was a grand or so appeared in the market, which has pushed the price back down. So how do I get ourselves into a profitable position? Well, I can wait for those orders to fill, or I can just start pumping the market full of orders again. So if you look where this green area is here, you'll see that as I pump more orders into the market, can you see how that starts to come down? So what you're seeing here is not some amazing new clever trading strategy technique. What you're seeing is my trade liability is rising. So I'm not doing anything clever here. I'm just basically using a bigger and bigger and bigger stake to do this trade. And because we're scalping, and scalping is a high probability strategy, we've got a fair chance of that getting filled. So these orders up here probably aren't going to get filled, so I'll just cancel those off. I should also point out as well here that I've got you've often seen in my videos that this is crossed through. On this occasion it's not, so I should point that out as well. So I'm going to pump a couple more orders in down here, put a couple more in here, see if some of these get matched. But can you see, basically by putting more and more orders in, despite the fact the position's going against us, we are actually pulling that green potential profitable area further down the ladder towards us. But we are also, and I must point this out again, we are increasing our liability in the market all of the time. If we left this and this went on to be a bet and this horse goes on to win, we lose 300 odd pound. So for the sake of the potential profit of £4 or £5, it's not a great return. So I'm going to add another order down here. I'm going to cancel these ones up here. Got about 1:30 to post. They're at the post. They're looking at the stalls. They're not doing much else. But what happens in the market is, as we move closer and closer to post time, the liquidity increases. So the chance of you getting these orders through actually improves as you get closer to post time. So this is a sort of activity that you would likely do as we head towards post. So you can see we've had a few more, but can you see relentlessly on this particular runner, the price is sort of coming down. It's moving around and wobbling a bit, but it is sort of, annoying us by constantly moving away from where we want our trades to be filled. I'm sure you've experienced that before. But I can tell you why this is happening. It's because we're following the price, we're chasing it, we're not anticipating it. And the way I trade is to anticipate price action. So you can see we're 1, 2, 3 ticks away. So 3 ticks is a very small margin for us to go, and now they're beginning to load. So you can see this position is temporarily against us in terms of the way that this has played out. So what we can do here is we can continue to pump orders in and try and get that green area a little bit closer to where we are within the market. That's an option for us. I'm going to cancel that one because the price activity has moved back up. So by continuing to put orders in and increasing our stake, what we're effectively doing is that green space is coming towards us. But obviously we're taking more and more risk as we do this. But you'll see what I'm trying to do in a second. And then the price on the favourite is coming in further and further at this particular moment in time. So they are getting close to loading. So you can continue this process and, let me just pump in a few orders here. And the more orders we pump in and the closer we bring that number down to where we are within the market. Not sure how many horses we've got left to go. There's 1, 2, 3, there's about 6 or 7. We'll see if these orders get filled. They're loading quite quickly now. In fact, they're loading very fast. So I'm going to cancel that order there. This must get matched, surely. There are 3 outs now. So we could take this loss here, but what you'll find some people do is, first of all, they'll pump the market full of orders to bring that green space closer to where they can profit. But also, let's put a position in the market here at 4.8, and I'm now going to do a keep all. Why am I doing that? Now, as I've told you 1,000 times before, if you take something in play, this is the issue. We've got a potentially large liability within this market. But by doing a keep all position in the market, we're looking at the favourite here. It's priced at odds of 4, and the market's about to go in play. That basically means that it's got a 20% chance, a 25% chance of winning this race. But that also means that it's got a 75% chance of losing. And if it loses the race, then ultimately it's going to trade at odds of 1,000. So as the race gets underway, basically, how long? It's a 1 mile race, so you won't really see a lot of price action within the race, unless if somebody gets off to a good start, or they're relatively sort of, or they don't get off to a good start. That's what I'm trying to look at. The start is very important. Then the race settles into a little period of activity and then they position themselves ready. So if you look at, I don't know if you saw what happened there, but the price spiked out because he got a little bit boxed in on this particular race, and it's got our position matched. So we had a fair chance of getting our trade through before the start. If that didn't work, we could pump it full of orders, but that increased our risk fairly dramatically. And if that failed, then we could actually, because we're only going to be, a small number of ticks away from the current or the off price, there's a good chance that it's going to get matched in play. Now, this is incredibly risky, but it looks really spectacularly impressive, because if I did this on every race that we had today, I would probably profit on the vast majority of races, if not all of them. However, that's not the issue. The issue is when that all goes wrong, you end up taking a position in play. It's very likely that you would probably be in profit before the race started, because you don't get your initial bet matched, so you pump the market full of additional orders. That brings the green area down, and then just before in play, those orders match, and then you cash out for a profit. If that doesn't happen, you take it in play, and most of the time that's going to work as well. On this example, we had a horse that had a 75% chance of not winning. However, that isn't necessary. We're only a few ticks away from its start price, so the chance of it getting matched in that little period there is obviously going to be much higher than 75%. So that, combined with a high probability scalping strategy, means essentially that you're going to get a very, very, very high win rate. However, the problem that you have with a strategy like this is inevitably you're going to get caught out in running sooner or later, and when that loss comes in, it will be significant. You saw on this occasion it was around the £600 mark, and therefore, while we can post a profit of a P&L of consistent profits, the issue that we're going to have is when that big one comes in, it's going to wipe out a huge swathe of all of those. If the characteristics of this will be lots of small individual trades, predominantly scalps, and also if you look at the P&L, you'll see that some of them have been matched at large prices, because those are the ones that were required to get matched in play. But if you want to trade that wins consistently and looks impressive, this is the thing to do. However, because of the level of risk that you're taking, it's not typically the way that I would trade.